Hi, everyone. It's 11:32, so let's go ahead and get started. Good morning. My name is Samantha Gherkin. I'm an employment attorney here in town, and I'm also on the 2024 programming committee with MT Sherm. Thank you for taking your time out of your day to join us for this discussion about the Department of Labor's new rules. I will have Nelson run a presentation for you, and there's going to be two ways that you can ask any questions you have. We have the chat open at the bottom. We also have a Q&A, and then a few minutes before the end of the webinar, we'll also open it up for your questions. So don't feel like you need to save them up. If you pop one into the box, we'll be able to read it out for you. At the end of the webinar, you're going to see a QR code and a link in the chat box for a survey, so that we can hear about what you want to know about and who you want to hear from, so that we can provide a better service to you. After that, a follow-up email will be sent to all attendees in a few days with the CE credit information. I'm going to let Nelson introduce himself and jump on in.
Perfect. Thanks, Samantha. Let me share my screen here real quick to make sure I do it right. Okay, that should have popped up, hopefully. Yes, I see here. We're good. Good morning or good afternoon, depending on where you're joining us from. My name is Nelson Suarez. I am an employment attorney with the law firm of Baker Donelson, based here in Nashville, Tennessee. Before I joined Baker, I actually worked in-house as an employment attorney for a Fortune 500 company. I totally respect and appreciate what our HR teams do because I spent a lot of time working with them closely and really being on the front lines handling these employment issues as they're coming up. So today's presentation is titled Unpacking the Department of Labor's New Overtime Rule and Our Next Steps. I don't know about you, but if you get the daily updates and briefings on things that are going on, all things employment law related, your inbox is just blowing up these last few weeks, because not only did we have this Department of Labor rule, we had the non-compete rule that the FTC released, we had the EEOC's new guidance on harassment in the workplace. So it's been busy here recently, on top of everything else that we've got going on. But our goal today is, for this next hour, we're going to try to unpack this Department of Labor rule, figure out what's going on there, and then have an action plan so that going forward, you know what next steps you're going to be taking. I'm going to say this a few times for reasons we're going to discuss on the presentation. There is no need right this second to dive in and start turning everything upside down, trying to comply with this rule. We're going to get into why, but just if you leave the presentation early, just hang tight on that. We're going to get into it and we'll walk through that process. As Samantha indicated, there is a chat feature you can use to ask questions, and I really encourage you to do so. It becomes more interactive that way. And please do use the feedback option at the end of the presentation to let us know, what went well, what can we do better on. I love getting that real feedback to improve in later presentations. So with all that housekeeping said and done, let's go ahead and dive into it. How did we get here? Why are we talking about overtime rule changes? Well, back in September of 2023, the Department of Labor announced it was going to be releasing a new rule, right? And here on April 23rd, just a few weeks ago, they went ahead and released that final rule saying, hey, this is going to be the new standard, and impacts the salary thresholds. Basically, at what point is someone not paid enough such that they must be paid the overtime rate as well as minimum wage. So we need to go ahead and cover the fundamentals, though, before we dive into the specific changes, because there's a lot of moving pieces here, and it's all impacted by the updates that the Department of Labor is proposing in its new rule. So starting at square one, all right, hang with me here. We're talking about the Fair Labor Standards Act. Now, if you're joining us from somewhere outside of Tennessee, or if you're covering sites that are outside of Tennessee, you'll want to be aware that they might have higher minimum wage laws. They might have additional requirements that have to be met to satisfy their wage and hour laws. Today, we are talking about the federal law, the Fair Labor Standards Act. Okay, so we know under the FLSA that you've got to pay at least a minimum wage. $7.25 an hour. You gotta pay overtime, time and a half for hours worked beyond 40 in a work week. And then there's also built into the FLSA, the record keeping requirements and child labor provisions. That's the general rule. That's the rule that generally applies to everyone. And like with everything else, there are exceptions. So if you are a quote unquote exempt employee, and we're going to get into that. If you're an exempt employee, you don't have to be paid overtime, time and a half. You can be required to work more than 40 hours and not get overtime. And generally, you're also exempt from that minimum wage requirement. The term exempt, though, is a word that we got to break down. When we're talking about exempt employees, we're usually talking about white collar employees, and that usually falls into the buckets of executive, administrative, professional employees, and highly compensated employees. There's other categories of employees that can qualify as exempt under the FLSA, like outside sales, highly skilled computer employees. But our focus is going to be on the EAP exemptions, which is, again, is executive, administrative, and professional. And we're also going to cover the HCE, highly compensated employees. Those two groups, EAP, HCE, are the ones where the minimum salary thresholds are being increased under these proposed rules. Okay. All right, hang with me here. So when we're talking about meeting the exemptions to qualify for one of those exemptions, to say you don't got to be paid overtime, you don't got to be paid minimum wage, you got to meet 3 tests. And what we're looking at here is how the employee is paid, how much they're paid, and what kind of work they do. All right, let's break that down a little bit further. So 3 tests. We're talking about how employees are paid. We're talking about a salary basis test. And basically what that means is the employee's got to be paid a predetermined amount, a fixed salary that's not subject to adjustment based on productivity or the amount of work that's available. It's a set amount each week, each pay period, no deductions, right? That's one. We're talking about how much the employee is paid. That's called the salary level test threshold. And this is the one we're going to spend most of our time on today. But you got to be paid at least the minimum salary threshold. Right now, it's $684 a week. That, you do the math, turns out to about $35,568 per year. That is the current minimum salary threshold to qualify as exempt. Okay, and that's increasing. The third part of that test is the kind of work being done. It's referred to as the job duties test, and we could spend a whole day talking about it. We're just going to touch on it, but that's a whole separate presentation. So for now, the thing to keep in mind is that what is really changing is that salary level threshold. Okay. As a reminder, we got to satisfy all 3 of those tests in order for the employee to be properly considered exempt. Everyone still with me? 3 tests, got to meet all 3. If you miss one, not properly classified as exempt under the FLSA. All right. We're going to spend just a moment, though, going over what those job duties tests look like, what the requirements are, because I think this analysis is important to have in your back pocket as you go into these next few weeks and trying to figure out, okay, who are we potentially reclassifying? What are we doing? We want to have these exemptions in our back pocket because if anything, it's not a bad idea to just re-examine the reasoning for why we're considering these employees exempt to make sure we got it right the first time. At some point or another, someone made the determination that this role here, it's exempt, it's going to be paid a salary. It probably didn't write down a memo explaining why that was. And so as you're going back in there and looking at, hey, do we need to increase this person's salary? You might as well take a look at where they even properly considered exempt in the first place. So the first one is the big one. It's the executive exemption, job duties test, and you see three prongs here that got to be met. I'll just quickly go through them. But to meet this exemption, you've got to have an employee whose primary duty, most of what they do, involves managing the enterprise, managing a customarily recognized department or division, regularly directing the work of 2 or more employees, and they've got to have authority or at least have some meaningful input in the hiring or advancement or firing of employees. That's one. That's the executive exemption. Maybe even more common is the administrative exemption. Here we've got employees whose primary job duty involves performance of office or non-manual, it's important, non-manual work directly related to the management or general business operation of the business, and primary duty involves exercise of discretion, independent judgment of matters of significance. Hint, hint, HR, that's usually you. Administrative exemption, that's where you tend to fall under. Okay, then we've got these other exemptions here that could apply. You've got the learned professional exemption. I'll just briefly touch on it. Usually lawyers, doctors, engineers, RNs, and then the creative employees exemption, actors, writers. I really think the ones that you work with are probably the first two we touched on, but just know there are many exemptions, more than the ones we're covering here. But we've got to fall into one of those buckets in order to qualify as exempt under the FLSA. All right, okay, I know we're moving quick. That's because I want to get to the meat of what we're talking about today and not spend too much time on the background. Highly compensated employees. So this is a different group that is considered exempt, really on the basis of how much they're paid. In a nutshell, a highly compensated employee is paid a salary that meets a certain threshold. Right now, it's $107,000 or $107,432 per year. And then they also perform one of the exempt job duties, right? So that's another category that's being impacted by the changes. Usually, usually not the ones where you're going to have a bunch of employees that maybe don't fall into the category, but good to be aware that they're also being impacted by the Department of Labor's proposed changes. Okay. All right. Still with me. Okay. All right. So in order to be properly exempt under the FLSA, we've got to meet all three of these tests: salary basis, the salary level, and the job duties test. So now we're moving into the substance of what we're going to be talking about today. And again, right now the threshold is $35,568 per year, which is also $684 per week. That is increasing. So, $1 million question: what's changing? What do we got to be aware of? Here it is. So under the new rule, in order to satisfy that salary threshold test, the amounts are moving up to $844 per week, which evens out to $43,888 per year, effective July 1st. The amount is increasing one more step to $1,128 per week, which evens out to $58,656 per year, effective January 1st, 2025. This is not a, choose which one you want to comply with. This is the increase. They're doing two separate increases to give employers more time to catch up. Those are big increases. Again, we're going from $35,000 to $58,656 by January 1st, right? You might be asking, where are these numbers coming from? That just seems totally arbitrary. Why didn't they just say 44,000 flat? Where are they getting this info from? The numbers come from census data. The Department of Labor looked at wage reporting and set it on the lowest region and said, okay, we'll go with the 35th percentile of the lowest wage region, which was the South. And so going forward, in order to satisfy the salary threshold test, you got to pay at least this much. Okay. There are some rules and regs in there that let you meet some of that, up to 10%, through non-discretionary bonuses or incentive pay. Again, keyword non-discretionary. But bottom line, effective July 1st, you've got to pay at least $43,888 per year to qualify someone as exempt. That goes up to $58K. Yes, go ahead.
Question from the group: is there any chance these two salary increases won't go through at the last minute, or are they firm?
There is a chance. And we're gonna get to that, but I'll say this, I know it's the burning question of like, how much do we really gotta, move on this right now? To answer the question, there is a chance that it's challenged. There is a chance that a court says, no, Department of Labor, you can't do that. Put everything on pause, and therefore employers, you don't have to comply with this right this second. We don't know if that's gonna happen. To date, as far as I know, unless it happened in the last 20 minutes, it has not happened yet. If history repeats itself, it could be there is no challenge, or it could be there's a challenge a week before that July 1st date. We've got some prior examples where, increases were done in the past to go off of. Right now, the guidance, the recommendation that I'm giving folks is start preparing. I don't think you got to hit that switch and make those increases today, but I think it's important to start preparing as if you might have to actually go through and make those increases, because we don't know if the court is going to put a pause on it. And we will talk about that more here towards the end, but it's a good question. It's a burning question, I know. Okay, that is the change as to the white collar EAP employees, right? So we've got these salary changes. Also changing is that salary threshold for our highly compensated employees, the HCEs. So recall that they are, currently have to be paid at least $107,432 annually. Similar to EAP employees, that's going up to $132,964 July 1st, and then going up again to $151,164 annually effective January 1st. Similar to the EAP employees, where these numbers come from, again, it was census data. They based it off of the 85th percentile of full-time salaried workers and say, okay, going forward, effective these dates, HCEs have to be paid at least this amount to qualify to meet that salary threshold test. That's a lot. Okay. And there's more. So in addition to those changes, the Department of Labor said that, okay, and also every 3 years, the salary thresholds are going to increase. So in other words, July 1st, 2027, automatic increases are going to be put into effect so that the salaries kind of keep track with, inflation and all that. We don't yet know what those later increases are going to be like. Again, those are much further down the road. The focus right now, I'm sure, is the immediate, July 1st of this year and then January 1st of 2025. So what does all this mean? All right, just going full circle here. Effective January 1st, 2025, your salaried exempt employees that are making less than $1,128 per week, aka $58,656 per year, they will no longer qualify as exempt under the FLSA. So far as the law is concerned, they will be considered non-exempt and entitled to overtime. Again, assuming the rules go into effect. So that only means that they're entitled to these, higher salaries, but if they don't qualify for one of these exemptions, we are obligated to keep track of how many hours they've worked each day, each week, because they're going to be entitled to overtime. We've basically got to figure out whether we're going to treat them as exempt or non-exempt, because otherwise we're going to have all these lingering obligations out there as to tracking hours worked. Okay, a lot of questions, I'm sure. One of those, as was brought up, is this even going to happen for now? Hang on to that. What does this mean? Does this mean that we're going to have to either convert everyone to hourly or increase everyone's salary in order to comply with this law? Not necessarily. There are other options out there that employers can take to still satisfy the FLSA and not necessarily increase everyone's salary to those minimum thresholds. So one option, you might be familiar with it, salaried non-exempt employees, right? If you're familiar with that, great. If you're not, I'll just go over it real quick. So salary non-exempt employees, as the term might suggest, they're paid a salary, but they're still considered non-exempt and they receive overtime pay. So they might receive a flat salary, each week, and that's intended to cover, 37 and a half or 38 hours per week, however the employer works it. But they're still tracking their time so that if they go over 40 hours, they're paid an overtime rate. So the point is that where we are right now, you're not in a situation where you've got to pick one or the other, increase everyone's salary or convert to hourly. But we are somewhere that we need to start figuring out which route we're going to go. Let's see here. Okay. So for those of you taking notes, here are the changes on one page, on one screen, the salary increases as far as the deadlines for compliance. Under the proposed rule, we're gonna get into what that means, proposed versus actual, like going into effect. But here's your one pager on what those changes are going to look like. This is what the ops folks are going to be interested in, is what does it actually mean. Okay. All right. How are we going to prepare for this? Let's talk about it. So bearing in mind, our key dates are July 1st, 2024. That's the first increase. And then January 1st, 2025, that's the final increase in the rule. Is everyone sitting down? July 1st, that's about 7 weeks away. Not to instill any panic or concern, but this is a fast approaching deadline. And again, we have not yet seen an actual challenge to that rule. So this is something we want to work on in these next few weeks. While the rule might be challenged, there's no guarantee that it will be. There have been prior rules issued by the Department of Labor, similar to this one, that, while technically challenged, ultimately fizzled out and the increases did go into effect. Okay. So we're planning ahead. All right. Here's my recommendation. Here's our step one. Figure out which employees might need to be reclassified. And what that entails is putting together either a spreadsheet or a list. If you depending on which HR system you're working off of, you might have a way to export data and just create a list of all the employees that fall underneath these salary thresholds. So what you end up with is, a listing of employees based on salary ranges that, are going to be under these, thresholds. I recommend also gathering up their job title, location, supervisor. It could be you're working with dozens of different sites, in which case you've got a little bit more work to do. Or you might have just one site, which is great. That's much easier to manage, but start by gathering this information up, export that data. Let's figure out what we're actually working with when we're, talking about potentially having to convert employees or increase salaries. Take note of how many people you've got in which role, and you start with that biggest group, right? If you've got 25 customer service leads that up until today have been classified as salaried, let's start with that big group and then work our way down to a smaller group. It tends to be, when I've worked on this, that we've got not that many different job titles impacted. So it's much more manageable when you break it into groups like that. Okay, get your list. And you can go ahead and, start with your July 1st list, or if you want to just tackle the whole thing and just have all the data there, you can run a report from, all employees underneath that $58,656 threshold. Okay.
Now, we have a question.
Sure.
We're asked, this only affects salaried / exempt workers, right? Can you explain the relationship?
Yes. So this Department of Labor rule that we're talking about, essentially what's going on is they are increasing the minimum salary that an exempt employee has to be paid in order to properly be considered exempt. So recall the 3 tests that we went over that you have to meet in order for the employee to actually properly be considered exempt. they're increasing that minimum salary threshold. If you've got hourly employees, you don't have to make any changes. When I say hourly, I mean non-exempt, they're entitled to overtime. We record, we keep track of their hours worked, all that. They can stay the same. That's all fine and good. It's those employees that you've got in exempt positions that don't get overtime, that we don't track their hours. Those are the ones that might potentially be impacted by these changes. Does that answer the question?
I think it does, but I'll let you know if she pops up with another question. Thank you.
Okay, great. Yes, please keep those coming. But yes, right now it's only salaried employees that we're potentially having to take a close look at and see what we're doing. Going back to, okay, what do our next steps look like? We went over, recommended step one, which is building out that list or that Excel sheet with information as to all the employees that are potentially impacted. Again, we're just looking at salaried workers that fall below those salary thresholds. The ones that we're gonna have to look at and say, okay, are we gonna increase their salaries to meet that minimum? Or are we gonna convert them? What are we gonna do? To kind of help the discussions you're gonna have with ops down the road, it'd be a good idea to figure out how many hours they're actually working, right? In some cases, it might make more sense to simply increase salaries if they're really working that many hours each week or expected to. And in some cases, it might make more business sense just to convert to hourly and leave things that way. But while you're going through these motions and gathering data, it would be good to talk to supervisors over those groups, figure out what the expectations are on hours, figure out even those hidden hours that are out there, like checking emails, answering phone calls after hours, and then determine also, do we currently have a time tracking mechanism that would work with these groups of employees? You might have remote workers, you might have employees with the usual chrono system where you swipe your badge. It wouldn't really work because they're not necessarily in the office or in the plant all day. You might have to come up with something different to help track their hours. Now is a good time to start working on that because that takes time to figure out. All right, ultimately, we're faced with the question, right, of do we raise their salaries to meet the threshold, or do we reclassify them to something other than exempt? It could be hourly, it could be salaried, not exempt, but if we're not raising to meet that salary threshold, we're gonna have to have some kind of reclassification discussion, right? And again, the business folks, ops, are gonna wanna know, what are these costs gonna look like? It's gonna really involve figuring out how many man hours we're putting into these different divisions or these different roles to see what makes the most sense from a cost perspective. Whether we're just gonna increase or convert to hourly and just eat the overtime costs. Either way, so long as you're either increasing the salaries or converting to hourly, the Department of Labor is going to be happy with you because that's the goal here. Either increase the salaries to meet that threshold or pay people overtime if they're working more than 40 hours a week. All right. Now, why did we spend so much time earlier going over those job duties tests, EAP, learn professionals? Why do we do all that? Because chances are, for some of the roles you're going to look at, it's not a clear-cut answer. Chances are that you might look at some roles and you're like, well, gee, I mean, maybe they fall into this classification, maybe they don't. I will tell you, as someone that spends a lot of time with the FLSA, it could be a lot clearer. There's a lot of gray area in these exemptions, and there are lawsuits that result because some people feel like they were not classified appropriately. They don't feel like they meet that job duties test. And that could be a factor to consider when you're determining, okay, do we keep this role as salaried exempt and increase the salary, or do we just go ahead and convert it to hourly? If you're on the fence over whether this role is even exempt in the first place, then having that discomfort, that uncertainty about whether they were classified correctly to begin with, that might help you push, that might help push the conversation towards, let's just go ahead and convert to hourly and be on the safe side. You won't get into trouble with the Department of Labor if you convert the role to hourly and pay overtime. That is what they want. It's what the FLSA wants. It wants people to be guaranteed those protections. It's when you convert too many roles to salaried without good basis that you can get into hot water with the Department of Labor. All right. So that's going to be, the ultimate question: raise, reclassify. What do we do with them? Okay. And like with anything else, it gets a little complicated, right? There's a lot that goes into simply converting someone to hourly or keeping them salaried. Some of it is just perception. Some of it is, a business thing, but we're going to go over some of the considerations to maybe take note of, keep in mind, be prepared to have discussions on with not just employees, but ops, all those folks. So, one thing that might happen if you're doing reclassifications, you end up with positions that seem very similar, but some of them are going to fall into the salaried exempt bucket, and some of them are going to fall into the non-exempt bucket because they're not meeting that minimum salary threshold. What am I talking about? Let's say you've got warehouse manager 1, warehouse manager 2, warehouse manager 3. It's different tiers of the position, but one of them is salaried and the others are not for one reason or another. Could be because they aren't making enough, could be because of their job duties. Is that okay? Totally okay. You can have different tiers of the same position to kind of help work through these salary changes and perfectly okay under the FOSA. And it's quite common actually. And the reason you might have that is maybe your warehouse 1 is a more, entry-level warehouse manager position, and then the higher tiers are more supervisory focused on really running the show at the warehouse. That's something I think a lot of employers are going to consider here, is maybe moving some of the employees in that role at issue into a tiered system to, keep some salary and then keep some, in their same position, same title, but not necessarily on a salary basis. So some of the consideration there. Again, for the salaried folks, we can't make any partial deductions for them. So if you've got, again, using our warehouse manager example, just because I recently worked through one of those issues, you can have your, your warehouse manager 3 receiving a salary, totally fine, no deductions for them, but then your warehouse manager 1 that's being paid on an hourly basis, they can be subject to deductions for missing work. Shifting gears, morale issues. I think it goes both ways. I get a lot of concerns being raised about, is this going to impact morale? How do we navigate that? To be sure, a lot of employees like being salaried. They like the flexibility that comes with it. A lot of employees like getting overtime. I think it might, be dependent on your workforce, what people are going to prefer or not. But in my experience, it's very dependent on the individual. Who doesn't like overtime, right? At the same time, the flexibility that comes with being able to come and go and not impacting the wages is also pretty nice. But these are some of the topics we're seeing coming up as we're having these wage adjustment or salary increase discussions. So along the same lines of that tiered system I just touched on, another concern we get is this employee going to view this tiered system as like a demotion, essentially, them being reclassified. Maybe, but I think you can do a good job explaining, what it is we're doing, why we're doing it. It's no secret that, any changes are being driven by the Department of Labor's change. That's fine to discuss. And I think you can sell it in a way where people understand what's going on. It's not, ABC company picking on employees. We're just making sure that we're complying with the law and making sure people are paid properly. This is not the first time that the Department of Labor has increased the salary threshold. Chances are you might have even worked on the last one, so you could be familiar with everything I'm saying right now. Very likely. All right.
Nelson, we have a question from the Q&A. What
Sure.
about a catchphrase at the end of the year?
Say again, you broke up a catchphrase?
What about a catch-up raise that's given at the end of the year?
Yeah, so let me make sure I understand correctly. So essentially, wait and see until the end of the year to see what actual changes go in, and if there was a change on July 1st, make them whole at the end of the year? Well, I'll run with that. I'll break into a few different scenarios. So the question presented is, can we do a catch-up raise at the end of the year? So let's say you do that. But let's using this hypothetical, let's say the change that goes into effect July 1st isn't challenged. July 1st comes and goes. The rule is technically in effect, but you've not adjusted salaries so that you've got some employees beneath that July 1st threshold. Between July 1st and whenever you make that catch-up raise to put the employee at or above the July 1st threshold, that entire time the employee is going to be considered non-exempt under the FLSA. That means between July 1st and whenever that catch-up raise is done, they will have been entitled to overtime pay for any weeks where they work more than 40 hours. What's the issue with that is we're probably not tracking their hours worked in the interim. And if they say they're working 50 hours a week, it's on us to be able to show what they actually worked. And more often than not, we don't have that information if we're not treating them as hourly. So assuming I understood that scenario correctly, would not recommend it. What I would recommend is working on a plan, bearing in mind that we've got this July 1st deadline and the separate January 1st, 2025 deadline, and being able to essentially move quickly if that July 1st deadline is getting here and there's no movement going on. Basically be able to hit that switch, do the background work to make sure we're ready for those deadlines. And if we get to be a few days before July 1st, nothing's happened, hit the switch and then convert folks over. It's going to vary a whole lot from business to business on what's practical, like how much heads up, how much leeway you need to get things moving, because some companies are going to have a handful of employees impacted. Some companies are going to have a few hundred people impacted across multiple different sites. So hope that answers the question. And then just to go full circle for anyone that recently joined in, effective July 1st, the minimum salary threshold is going to jump up by a good bit. And if people aren't being paid that minimum, they're technically not properly considered exempt from overtime, and they're entitled to it. Okay. Keep the questions coming. All right, so we're having these discussions, right? We're trying to figure out, do we convert people? Do we move them to hourly? What's that going to entail? I mean, if you're used to working with a lot of hourly workers, if your workforce is largely hourly, chances are you've got policies in place, you've got systems in place. If, however, you work mostly with salaried workers, or maybe this is an employee that's been salaried for the longest time, they're not familiar on what exactly goes into keeping track of their time, they might need a refresher on what that entails. And again, that's on us to make sure we are recording their hours worked. They've got to play a role into it. They've got to enter their time, use the time sheets. But at the end of the day, we've got to prove that we're paying for all hours worked. So look at your timekeeping records, policies, procedures. If you're in Tennessee, meal and rest breaks are pretty straightforward. Other states, if you've got plants, warehouses, et cetera, in other states, that can be an area of concern just because there are states out there with their own wonky meal and rest break laws. The big one's probably going to be for people that are used to being salaried is checking their phones or emails, answering phone calls outside of work. Check and see if we have a policy to address that. May need to have a training with folks that are being converted from salary to hourly on, hey, we got to report all our time worked. Here's how you log those phone calls if you need to take them, those emails. This will be a good time to refresh our recollection, I guess, on these things, because the workers, are usually just trying to do their job right, get the work done. They're not trying to fool with submitting extra time sheets, but they have to, and we got to encourage them to do so. So a lot of considerations out there. this is the $1 million question, I know, and I want to get to it before we run out of time here. Possible legal challenges. So it's come up a few times already. Is there any chance that, you know, this whole presentation is a waste? You just talked your head off for an hour and, you know, lo and behold, it was all for nothing. Maybe. Probably not though. If I were a betting person, I would say there's going to be some change. I can't tell you if it's going to, you know, go into effect on July 1st. Can't say whether that January 1st deadline is ever going to actually come to fruition. What we can say is that according to the Department of Labor, we get a July 1st deadline of this year, and next year we get a January 1st deadline. And here's what has happened in the past. Because I think what has happened in the past is good to know as we consider what's our next move. So if you've been doing HR for a bit, you know that in 2016, the Department of Labor had a very similar type rule where they were increasing that minimum salary threshold, right? They were moving it from $4.55 a week to $9.13 a week, pretty big jump back then too. And they had all these things rolling out. There was a deadline of December 1st, 2016, where it was going to be effective, and November 22nd, yes, right around Thanksgiving, November 22nd, a court said, nope, hold up, pause. This is not going into effect, and put the whole thing on hold. Just days before that deadline back in 2016, everything was put on pause. I mean, there were tons of employers that had already, made increases or reclassified employees, a lot of conversions to hourly because, take yourself back to November 22nd, we're just a few days from that December 1st deadline. Can that happen again? Can we get up to June 25th and still not know anything? Possibly. That really could happen here. We're just a few days before the deadline. That's when we get someone that challenges the rule and a judge agrees and puts it on pause. We just don't know. We don't know that yet. And so what happened with that 2016 rule? Well, later in 2019, the Department of Labor published a new rule, took back the 2016 rule, and eventually there was there's still a salary threshold increase, but not as much as what was originally sought. What's different this time is the way the Department of Labor has broken it up. We've got that July 1st step up, right? And then January 1st, 2025, there's another step up, right? We didn't have that back in 2016 where they broke it up. If you ask the Department of Labor, they're going to tell you, well, the reason we're having it in 2 steps is to make it easier for employers to comply. Because I mean, the jump from 35,000 to 58,000, that's big. That's a dozen employees, and we're talking 6-figure increases in total. Is there some strategic, some legal strategic reason why they, did 2 steps instead of 1? Maybe. Maybe. We just don't know yet for sure whether, in fact, it's going to withstand some kind of challenge. And that's the other thing. In order for it to be paused and the deadline to be put on pause, someone has to step up and say, no, we're going to challenge this. And if no one does that, then the rule goes into effect. So, what do? We prepare. That is the general consensus from everyone watching this thing, is start putting those plans in place to figure out, who's potentially impacted, who might we consider reclassifying. Doesn't have to be hourly, it could be salaried, non-exempt, but some kind of reclassification is going to have to happen if we're not just increasing everyone's salaries. Okay. All right. Flew through that in record time. We've got a few minutes here at the end for questions. So please send those in. Definitely move through that quick, but I hope it was helpful. So what questions do we have? Well, I've got a question that I don't know the answer to, and it's something that we're kind of on the lookout for. Can someone not challenge the July 1st deadline and then wait until, a few months down the road and then challenge that January 1st, 2025 deadline? So basically, are we better off just doing the full increase now or just waiting to see, what happens come January 1st, 2025? I would recommend that. I would recommend, if you do any increases, focus on that July 1st threshold and wait and see what happens for the January 1st step up, because it's possible. It could be that July 1st isn't challenged, but the second one is. We'll just have to wait and see how that plays out. I do see questions coming in. I just can't see what is in the chat bubble there because of how my screen is set up. Samantha, can you see? Okay, I've got it here. Let's see. So one of the questions we got is, with the new rules, does bonus play any part? Can bonuses play a part in meeting those salary thresholds? Yes. So for EAP employees, up to 10% of that salary threshold can be met with non-discretionary bonuses, things like commissions, things like that. And if through those non-discretionary bonuses, the employee does not meet that minimum salary threshold, you have to do a catch-up payment within the first pay period after the year ends. And if you've got an employee that started, mid-year or resigns, they get a prorated share of that amount. But yes, bonuses are still in play. Another question we have is there a time limit on when the rule can be challenged? Like, do people have to file a challenge at least 1 week before it goes into effect? No, they can challenge it after it goes into effect. They can challenge it, 3 months down the road after it's already gone into effect. Ideally, if someone's going to challenge it, they do it beforehand. Otherwise, they've got all that time racking up where they're probably not complying with the FLSA. Another question is, do we have to use a timekeeping system if you're moving these employees to salaried, non-exempt? Yes, great question. Salaried, non-exempt employees are tricky in that regard, right? We like having them salaried, non-exempt. Employees tend to like being salaried, non-exempt because it has that flexibility, but they're still getting that same flat salary. Any work week in which a salaried, non-exempt employee works more than 40 hours, they are entitled to overtime. So we have to track their hours worked. So you've got someone that's salaried, non-exempt, if they work 41 hours that week, they're entitled to 1 hour of overtime. Let's see. If we move a salaried employee to non-exempt, how does that impact things? What would their pay be for overtime? So what we would do is figure out what their hourly rate is. We would figure out what their regular rate is just by doing a conversion. So say you've got someone that is salaried, and I'm going to try to do some math here on the spot, but they're paid a salary of $40,000 a year. And don't quote me on this, but that evens out to, I don't know, let's say $20 an hour. That's wrong, I know. Their overtime rate would be $30 an hour, just by doing time and a half. And I know the math is wrong, but essentially you would just convert, what their salary, equals into an hourly rate based on working 40 hours a week. It's a bit tricky, but totally common, totally can be done. You're just converting, their salary into an hourly rate. What approach is best when trying to convince your executive team that a position is truly hourly? Okay, that's a good question. First thing is, I think you want to have your bullet points on why it is we feel this way, because let's face it, folks in the ops groups in the business, if that's the way we've always done it, that's a pretty good reason in their book, not in my book, not in your book, but that's the way we've always done it. Seems to be good enough for the folks in ops. So how you would want to approach that conversation is have perhaps that job description that's at issue, and then maybe a copy of the Department of Labor's little printout on which exemptions apply. You can Google, Department of Labor EAP exemption, and they've got a nice little printout with, the bullets that got to be met in order for the person to truly be exempt. And you can have that discussion with, like, look, we've got this forklift lead position, for example, and we've been treating them as exempt for the longest time. I was looking at these new Department of Labor overtime rules and taking a close look at what our options are, and I don't think this role qualifies for its exemption. And going to the risk, why is that a big deal? It's a big deal because if we're misclassifying this person, they're entitled to overtime. Doesn't matter that we call them exempt. Doesn't really matter what the job description says. It matters what they're actually doing work-wise. If they're not properly considered exempt under the law, they are owed overtime, and we could face a lawsuit months from now, years from now, from this person claiming to do all that time. And it happens. You'll get an employee who you've had for years and years, and then out of nowhere you get a lawsuit saying I was misclassified. I'm owed all this money for overtime, and you're thinking, well, they seem so happy the whole time. Where is this coming from? It happens. Okay, is there a grace period to implement? Can we wait until July 1st to change pay and make it effective August 1st? Depending on how your payroll runs, you might be able to do that. So let's see here. So let's say you got that July 1st deadline, your pay period August, your paycheck August 1st covers from July 1st through the end of July. If that's your regular pay cycle, I suppose you could do that. But if you're paying bi-weekly, you would technically owe back wages during that time period. Hope that answers your question there. But again, for everyone listening, that July 1st deadline, so far as we know, it's an actual deadline. Starting July 1st, if you're not paid at least the minimum salary threshold, you're entitled to overtime. And any pay after that point has to reflect that overtime. I have a bunch more questions here, trying to get through to everyone. I got one that says, can you give an example? I don't recall what the example relates to. If you could type it out. Okay, can you put a fluctuating work week calculation in place? So you can still do, the salary basis. It's like, I think I would need more information on that one. Maybe one of those where we've got to follow up with you to make sure I understand. I don't want to mislead you here. But generally, things like a fluctuating work week should still be fine. But follow up with me. I've got my information here on the screen. If you've got questions, I want to make sure I'm answering the right question here. Another question is there a grace period to implement? Oh wait, I already covered that one. Okay. All right, I think I'm caught up on my questions here, and we're at 12:25. Samantha, did you have a wrap up here for us?
Yeah, I do. So it looks like those are all the questions in the chat and in the Q&A. So thank you so much for taking over questions at the end here. And thank you for your time today. It's been a great presentation. Obviously, this is one of those rules that's going to affect basically all workplaces, basically all HR departments. So it's something that we all really need to know about. For attendees, the CE credits are going to be sent by email in the next couple of days. So look out for that so that you're able to get credit for participating in this webinar. There is a QR code up so that you can share your feedback about this webinar, about what you're hoping to see this year from MT SHRM, of topics that you'd like to learn about. And I'll also put the link into the chat if you're not able to grab it on the QR code. But if we don't have any questions, then I'm going to go ahead and let everybody go. Thank you so much for joining us, and we will see you at our next event. Thank you all, and thank you, Nelson.
Thank you. Thank you all for your time. Hang in there. Hopefully we get more info in these next few weeks, but if not, I think we've got a game plan going forward. But do feel free to reach out if you have follow-up questions.
Have a good afternoon, everyone. Bye.